Hi everyone, welcome back to Innovate Together, the podcast. My name is Professor Matt Freeman. We're based once again in the Bridge Studios. We're part of the University Enterprise Zone next door to Future Space. As you'll know, this podcast is a sort of peek behind the curtain of the innovation journey, particularly for tech startups in the Southwest. Absolutely thrilled and honoured to be joined by Ben Cooper today. Ben, I'm going to get you to introduce yourself just in a second, but the focus for today's episode is the investment landscape and the state of play, particularly for tech startups in the region. We're going to sort of delve into some of the state of play in terms of what's going on, some of the challenges, some of the opportunities, some of the trends that are currently out there. And I don't think there's anyone better to speak to this subject than Ben. So thanks ever so much for joining us. Ben, can I just get you to just say, introduce yourself, but just maybe a little bit about your kind of background and
Sure.
how you kind of got where you are, really.
So, Ben Cooper, as you rightly say, so I wear a couple of hats. I'm co-founder and director of Angel Investors Bristol. We're the probably largest angel group in the Southwest. We've just got shy of 140 members now. Been running since the end of 2023. Recently completed our 8th investment. That period, near on, I think we just shy of about £1 million of investment so far. So yeah, that's going really well. We invest predominantly in Southwest and South Wales based businesses. My other sort of main hat is Tech Southwest. I'm a director of sort of cross-regional tech cluster. We work with the regional tech clusters, people like Tech Exeter and Tech Cornwall, Silicon South, all the different clusters across the region. But we also run an accelerator program called Growth Forge, which we're Future Space is a big supporter of and partner for, and also a funding finance program where we work with founders, provide them with support in gaining investment. So all these various hats, they kind of do link together. There is some method in the madness.
Yeah.
How did I get to where I am? So I spent 25 years in financial services, everything from starting my own unit trust company back in 99. I think we launched our first fund just at the time, going into the first tech boom, which was not great timing, but it was an interesting experience. Probably my first experience of starting a company really, was in the financial services space. Then I worked from everyone from AXA Global Wealth, and my final sort of gig, I suppose my final proper job, as I would call it, was part of a management buyout that bought a discretionary fund management company in Bristol, sold that to St James's Place in 2016, did a couple of years of own out from there, and then since then I've been angel investing, working with startups, and just getting involved in that type of thing. Just love it. So so just found my passion, I think, and just really enjoy working with it.
Nice. All right, to start it off, let's keep it sort of quite broad, I thought, and it would be great to just sort of get your kind of initial take really on what's it like out there at the minute. So obviously we're thinking about tech startups, specifically Southwest, but how would you kind of characterise the scene at the minute from an investment point of view?
It's tough. I don't think you can try and put a silver lining or spin it positively, but I think actually it's really hard. I think the numbers show that. So through Tech Southwest, we have a partnership with Bowhurst, and we get access to their data, and it doesn't make a pretty picture for the UK, let alone the Southwest. And I think investment last year was down nationally probably about 12%. So, it's not small numbers. It's 20 billion or so invested in private companies in last year, but only 3.5% of that goes to the Southwest. And in the Southwest alone, the investment was down 30%. So, and that trend's continued into Q1. Q1 in the Southwest is down 30% from last year. So it's a really tough environment. What we're seeing is in the southwest, deal numbers are probably similar. Just the value of each of those deals is lower, which is contra to the national scene.
Right.
So I think ultimately the southwest is struggling a bit for investment. With my angel investors Bristol hat on, we're still seeing 30, 40 deals a month. Well, applications, I suppose, a month for investment. That's not changing, so the demand is still there. But we're not able to. We're able to invest in maybe one of those a month.
Yeah, sure.
And our ticket sizes are probably smaller than I would have anticipated in the past. So yeah, I think it's tough out there for those businesses. And one interesting aspect of it, I think, as well, is what's making it really hard for early stage businesses is that we are, as an angel group, we're getting to see deals we normally get to see. So we're sort of a bit later stage. So we're starting to see sort of traditional angel investor where you're using government tax schemes to invest in really early stage companies, maybe MVP, about pre-revenue. We're actually investing more in companies that have got revenue now and got traction. And so that's kind of leaving a bit of a gap for those early stage businesses. And whilst it's good for angels, it's not great for early stage businesses. You need that seed capital, that pre-seed capital, really, that really early stage capital to get them to market, or at least get them to that sort of revenue point.
What's the reason for that? Is that a strategic kind of decision, or is it part of what's going on across the market? Or
no, it's not a decision, and I think it's just so the reason what we're seeing those later stage deals is the lack of liquidity in the market. So they're having to look further down the funnel to earlier to angel investors rather than to just VCs. To fill the gaps and fill the rounds that they're trying to fill. So we're getting to step into the shoes of VCs that may have stepped out of a deal. So we're filling a little gap in a much larger round, and so that those opportunities are being presented to us now, and in time that'll dry up because everything's cyclical. It will come back, but the problem at the moment is liquidity, and that comes right from the top, from the listed market. We're not seeing so many IPOs, we're not seeing so much M&A activity or mergers and acquisition activity. That's the bits that release capital into the market or release cash, founders cashing in, founders selling businesses. That releases cash into the market, and that trickles down. Entrepreneurs who have exited want to reinvest, but when that doesn't happen, the market runs dry. So albeit there's still lots of money in VCs, but they're not looking at this really early stage in general. Although, again, I would say they're starting to look more interested at early stage businesses, but it's not enough.
where would you say the Southwest is kind of bucking the trend, if you like? I mean, there's a feel, isn't it? I don't know how much it's based on actual metrics or whatever, but there is a feel that the Southwest is kind of really pulling above its weight, isn't it, in lots of ways? Can you?
I think we talk a really good game, and I think we have got a lot of good things to say, and we are doing a lot of great things. If you look at the government's main areas, we're going to get a strategic review, and we're having a strategic review. The results of that will come out in the next few months, but it's going to be defence. It's going to be security. It's going to be energy security, defence. Marine and clean tech. Those are the areas that are going to be, and you look at the Southwest, we're really strong in all of those areas, and so we should be, and you can see, we see the companies that are coming through, and I'm sure you see them in future space, and with my Tech Southwest hat on, we're all over the region, working with Freeport, we're working with the councils, working with other incubators as well, and we see so much great technology in these important core areas, particularly. We're moving into an interesting world where people are drawing in, becoming more, want to become more reliant or self-reliant, and so defence and energy, all these things where we've relied on globalisation, we're starting to look at those and think we need to protect our own resources. there's so much great tech going on in the Southwest, particularly in clean tech and med tech. Cyber's obviously we've got GCHQ in Bristol, and that's spawning huge amounts of innovation in cyber. So much so, there's a new angel group starting in Cheltenham, which is predominantly going to be investing in cyber opportunities, and that's just an indicator of what's happening. So we've got a lot of great tech going on, and we are seeing signs of VCs and fund managers starting to take more of an interest. We're seeing Foresight arrive, we're seeing other fund managers starting to arrive and open offices in the region, because they're starting to realise that not everything happens in London and the South East, where 70% of the investment is made. There is actually some great stuff going on in the Shires, and so they actually need to come and have a look. So that's a positive thing, and the more we can shout about that, the better, because like I said, particularly around renewable energy and clean tech and things like that, we're very, very strong. So those are areas that we need to focus on.
Those areas, I mean, in terms of investment, in terms of what you're seeing, are they the ones that are standing out in terms of succeeding?
Yeah, so absolutely. So the ones that we're seeing, clean tech. I think we've got the longest coastline in England, in the southwest. And we're seeing a lot of tidal, a lot of hydro, a lot of wind, offshore wind, and all the innovation that goes around that, the suppliers, the technology that goes alongside that. We're seeing a lot of investment directed toward those. Medtech, obviously, the government pushing for more home care, more preventative care, and so there's a lot of technology being developed in that area. And we're seeing that, again, the Southwest has got a lot of high quality teaching hospitals, and so we're developing a lot of strong technology in that area. I mean, AI as a subcategory. I mean, AI seems
everything.
So many, it's a broad church.
Yeah.
But a lot of these businesses are using AI in some shape or form to develop their. But then there's the AI, people who are developing AI tools and developing that, and we're seeing a lot of investment towards that. I mean, I don't think I see a pitch deck now that hasn't got some sort of reference to it.
Yeah.
But that's really strong at the moment. Those are sort of key areas where we're traditionally strong, and those are the areas that are attracting investment. And certainly, from my perspective, through Angel Investors Bristol, we've invested in energy, we're investing in both fusion, but renewable energy, lots of tidal power, medtech. We're looking at apps for sort of apps to support women in childcare and in pregnancy and those sorts of things. But also there's a company, there's a Microsoft, I think. Here now. We invested in recently through AIB with looking at the delivery of drugs through the use of aerosol and things like that. So and enabling businesses companies, pharmaceutical companies, to have a different delivery method for their drugs. So medtech, clean tech, cyber.
Yeah.
Sort of areas that are really strong. And marine as well.
Do you think? I suppose my question is about retention. I was. It's an interesting discussion I was looking at online. Marty Reid was sort of talking about the tensions between investment and then retention in a particular region, and what that kind of looks like. So, I mean, those key areas that you mentioned. Are you feeling that? Are they big enough or not big enough? Are they strong enough? Are they compelling enough to attract companies to the region? Is that reputation?
Yeah, I think the issues we've got. I think attraction, because we can't get away from the fact that the Southwest is actually a great place to live.
Yeah,
it's a great place to start business. Obviously, one of the positive things I suppose that came out of the pandemic was the breaking down of barriers and breaking, ability to work remotely, and so you could be much more flexible about where you worked, where you operated from, and that opened up the ability for particularly for software companies, and don't necessarily need a particular base to build something or make something. It opened up those opportunities for people to move to places that could improve their quality of life. And the Southwest has that in bounds. And so I don't think attracting people into the region, or at least the graduates and the people coming out of incubators and coming out of universities, keeping them here is not so bad. But I think it's when those companies start to grow, that's when the issue starts to go, because they tend to be attracted to or even encouraged to go where the money is. So that either means moving to London or South East or these sort of particular areas, or even abroad. And so we're seeing, one of the big issues, and one of my massive bugbears, is the fact that the Canadian pension funds invest more in the UK than the UK pension funds do. And you've got US pension funds, you've got sovereign wealth funds. They're all investing in the UK because they know we're generating great IP. We're generating great tech, which they can go and buy, and then they can go and take it back to their home markets. When surely it would be a better situation where we provided these companies with the opportunities to grow where they live, which is better for communities, better for the whole ecosystem, where our pension funds and our VCs are providing them with the capital they need, providing them with the support they need to stay where they are, because, like I said, that's better for the local economy, because that provides an outlet for kids coming through, it provides a skills challenge for them, it provides opportunity for them, because otherwise it just goes. We build it and then we get rid of it.
Move on.
And then we're back to square one again. So, we talk about the issues with education and skilling people correctly, but if the skill, if the opportunity landscape is changing all the time, it's very difficult for education providers and skills providers to deliver what companies need, because they may not be there now in a year's time, because they've had to leave. It's not that they necessarily want to. They've had to move because they've been forced to, because they have to go where the money is.
Exactly, where the opportunity is.
And that's the big tension. And so, I have a big, dream of, place-based investment where we can invest in areas, but it's not just infrastructure, it's providing the capital support of businesses, it's providing them with the support around the incubators, it's providing them work into the schools and the leisure facilities, and just this whole kind of Bourneville style communities where they all, we develop businesses, we skill those businesses, we skill the people to support those businesses, and they stay because we can provide them with the facilities they need and the support and the cash they need.
It's always the way like that, though, isn't it? Like, I mean, I was having obviously university background. I was having this conversation with there's no shortage of money out there for that seed stuff, from early stage stuff. Like there's so many kind of big research council, big sort of industry collaboration, innovation projects. They're always targeted at that early stage, that kind of seed, that pilot, that prototype, that initial kind of thing, and then it's now what? And it's always that issue, isn't it? It's always what next.
The whole point of commercialisation. It's a real, it's that gap between. Yeah, you're right. You're right. You can get grants, you can get support for that kind of really early stage, and then you can get support when you've got traction. It's
in between.
It's that sort of pre-seed piece where you're looking to go to market, you're looking to commercialise something that you've developed, and it's high risk, particularly in hardware. So hardware's always been hard. Hardware's hard, but it takes so much investment. It takes so much testing and regulatory burden to bring something to market. Whereas for software, obviously, it's much simpler, quicker to get to market. You can fail much faster. It doesn't cost. There's not much impact. Whereas with hardware, it's much more difficult to get something to market, and investors shy away from that, which is unfortunate, because as a country, we are incredible engineers and we produce incredible. Just need to support that sector.
What would that look like? Support for that middle bit. What is it?
I think it's I think it's a couple of things. It is money. We've got to have the investment. We've got to provide the investment for those companies so they don't need to leave. But then on top of that means they have to have facilities. So we need to have the lab space. They need to have the engineering space. They need to have that needs to be available to them to build to build their products and to make their products. But it's also, I think, it's actually one of the glaring areas is operational management. So you can be a founder, an entrepreneur, you can be spinning out of university where you're very, very focused on what your invention or your development is, but then commercialising that and making that an operational business. So you're shifting from development to production. There's a gap there in management around operations, and I think there's an opportunity, I think, for education establishments, FE and HE and schools to, that operational piece, but also reaching out to more traditional industries in the operational world and reskilling them to be involved in sort of more technology. Upskilling them or retraining them or whatever, but because they have that operational mindset about how things, they know the hurdles, they know the pitfalls, they know the bear traps that that come into building an operational process which is efficient, safe, and effective. I think there's a skills gap there, and I think that's a national issue.
Yeah, absolutely.
I think that's a national issue, but I think there's an opportunity there. I think if we're looking to things to skill and things to people to reskill, that's an area I think that companies, early stage companies, could really, particularly in hardware, could really do with help with. I think.
Yeah, absolutely. It's a slight segue, I guess, but it reminds me of a conversation I was having with one of the companies, remain nameless, but one of the companies here were talking about commercialization and spin-outs and universities and all this kind of thing. And they were making the point that, a lot of the discussion is around how do you take academic research and commercialize it, when actually it's a completely different skill.
Yeah.
And that gap that you mentioned is always going to be there because it's a fundamentally different skill. It's a different person usually.
Yeah.
Whereas actually, like businesses like here at FutureSpace, for example, like the quote that was given to me is, you don't need the academic to commercialize it and deploy it because we know how to commercialize and deploy it. So it's that relationship it's a similar thing, isn't it? It's about skills and bridging that gap.
It's about the right skills and recognizing, so the ideal scenario is that you have a founder who recognizes the fact that they aren't necessarily going to be the right person to run that company and it's that's great. But it's that there's that having that self-awareness that taking your example, you're an academic, you've probably you've done papers and papers, you've probably got a doctorate, or your research has been in this particular thing, but you have no business experience. It's very rare to get an academic who's then also commercially savvy. That's like gold, and so it's understanding that probably taking a co-founder or taking someone with a different skill set, that commercialisation skill set, and building the team around you who can fill those gaps that you're self-aware enough to know, and that can be coaching, that can be mentoring, because it might be something you need to be helped with, that realisation perhaps, or acceptance maybe, that maybe you're not the person that's going to be the CEO of this company in 2 years' time, because you're not the person to, because the CEO is your ultimate salesman, right? And so your CEO needs to be able to present the company, present the things, and if that's not your thing, you'd rather be in the lab or you'd rather be doing it. And that's great, that's fine. And obviously, that's where the idea is, that's where the value is being created, but you need other skills, you need other people to deliver the sales, deliver the operations, deliver the guidance, the leadership, perhaps, those sorts of things. And it's understanding that that's okay.
Yeah.
And that's that's the same in every company. So it's okay to let go. It's okay to let other people take those roles.
Yeah. I mean, just sticking with the spin-outs for a minute. I mean, something I kind of wanted to get your thoughts on. So historically, traditionally, it's always been a challenge, hasn't it, in terms of investing in university spin-outs, or it can be, at least, in terms of IP and ownership and what stake the university has or should have. And I've heard horror stories where, investors have pulled out because of some of these issues. Like, is it the same from your perspective? Is it getting any better? Is it changing?
I've heard the same and seen the same horror stories that you talk about. I think it's getting better. I think there's a lot of there's been a lot of research recently on it. There's a lot of focus on it. I think the universities, some are significantly better than others about what they think the value of their investment is and what they think the value of the holdings that they should have. I think for me, it's got to be. I think the universities have got to accept that there has to be some commerciality. Understand that. They've received a lot of grants. They provide a lot of support. They provide to the academics and to those that have developed the research. But they can also understand that you've got to remove that barrier. And it's right that they should retain something. And there, lots of ways that you can structure an IP licensing to transfer of ownership and things like that. But it's got to be in a commercially positive way for the investors that are coming in later. Because the people that are going to take it to market. Otherwise, it has no value.
No.
You can invest millions and millions in a piece of kit. And I've seen it. I've seen bits of kit that sat under tables. It's like, well, what happened to that? Oh, well, we couldn't take it to market. It's like, but it's going to change the world.
Yeah.
And I have seen it. Not too far from here. It's, where there are bits of kit where you think, wow, this was developed 15 years ago and they're only really bringing this to market. You had this so long ago, you could have brought this to market. You could have had this piece of tech actually. So I think it's understand. So it's academics and universities understanding what the process is for commercialising research, and it's also not being too greedy in what that is and letting it go, letting it fly, because surely it's better to have something in the market which is doing what it's supposed to do.
Yeah.
It validates that research. It validates all the money that the universities spend, the government spend. If it's out there and doing what it should be doing.
Yeah.
It's all validation, isn't it? And yes, they should get something out of it, but let's be realistic about it.
Yeah, absolutely. One thing before we draw this to a close, one thing I did sort of want to circle back to is AI.
Yes.
So you mentioned AI companies and developing tools and all that kind of stuff, but it was at the Tech Southwest Investment Summit a few weeks back. Actually, there was a brilliant presentation by Bohurst, and one of the things that really stuck with me, which I didn't know, I had no idea until, wow, that's really interesting. But when she said it, it made complete sense. Was the impact that AI is having on investment, and specifically kind of the process of deal making. So the point was being made, if you kind of just look at face value on the stats, it looks like all the lines are going down, but actually if you kind of dig into it and you realize how AI is changing this, it's changing when and how some of these sort of deals are being made. And I'm just curious really, what's your take on that?
I think it's interesting because I look at the process that we use for AIB for selecting the investments that we'll ultimately invest in. And we're starting to use AI. There is a lot of use of AI around, and this could be a double-edged sword because there's a lot of AI around that will analyse pitch decks, will analyse, which is great, and tries to find, and uses AI to determine whether there's a market, or determine there's lots of quite smart bits of technology out there that enable you to do that. My worry is that we'll start to get standardised pitch decks and we'll get standardised messaging because they know that kind of hits the buttons. That gets the ticks from the AI tool that the VCs are using. So I'm worried that might happen. But absolutely, I think there's the way that you can use AI to analyse lots of unstructured data and things like that enables, just speeds up that process of probably yes or no, or yes, no, maybe, and how much more. So I imagine you get to know a lot quicker, and therefore you probably get to yes a lot quicker as well, because you can use a tool to analyse things that you would have had to pore over for days and hours on end. And you need analysts and things, people to look at. Absolutely, AI is disrupting most industries, and I think probably investment management isn't alone in that. And I'm sure it's having an impact and certainly speeding up the process. And you might be right. It might be that go back to sort of 2021, 2022. Most things were getting, a lot of things were getting invested in, a lot of investment going on. Probably a lot of things now which are no longer around because they weren't. And you wonder, had we had the sort of AI tools and those sorts of things now, would they have really got that investment? And would they really have got? If you take the emotion out of it, if you take the human out of it, would they have got investment? Probably not. If you looked at it objectively. So there was just a lot of money around, and a lot of people starting businesses, so it just fed itself. But it might well be part of the issue around what I was saying earlier. And obviously, liquidity is a big issue, but it could be that maybe things are just getting rejected sooner because they're being seen as the chances of success are relatively low. We've got a number on it now, and our tool is telling us this, and it could be that it's a speeding up that.
So final question on the objectivity kind of front. We tend to sort of end the podcast with a bit of a tip, essentially, a nice simple kind of tip, a takeaway. So obviously aiming this at startups, probably kind of more at sort of early stage startups. Is there a single piece of advice you'd give from an investment point of view for an early stage startup looking to raise?
Yeah, sure. So I would say I do say to anyone coming to AIB or looking to raise money, is certainly in an early stage businesses, we don't have a lot to go on. You give us a shiny pitch deck, some made up forecasts, and and a lot of bravado and a lot of enthusiasm and passion. Two things that I always look for is the opportunity. What's the size of this opportunity? Do I get it? Do I think the solution? And actually, just backtracking on that, I don't necessarily think the solution you're developing now is going to be the thing that you actually end up doing. But is there a massive opportunity here? And then do I look at you as a founder or its founding team? Do I think you can deliver that opportunity? Like I said, it won't necessarily be what you think it is at the moment. You'll pivot maybe once, twice, maybe lots of times, maybe do something completely different. But is there a massive opportunity there? And am I impressed by the team? Do I think that you're going to deliver it? And those are probably an early stage investment where you don't have traction, you don't have sales, you don't have lots to go on. For an investment point of view, those are probably the two things that I'm really looking for. Team and opportunity.
Ben, thanks ever so much.
No, that's been great.
And thanks ever so much for joining us. We'll see you next time.